Hey guys, I just came across this video on real estate on the blockchain, real property token ICO by Charlotte, and she posted a video from this guy from altcoin Buzz. And go ahead and watch the video on Charlotte's page. Um, so it's I wanted to take a minute to talk about this because there have been a couple real estate ICOs coming out over the past few months, and I remember the first one I looked at, RE coin, was total scam, and I think it ended up getting shut down. Um, but I just wanted to show you at least how I would go through the analysis on this. So we go over here. They've got their fancy looking web page. It's all modern styling and everything. And basically, what they're pitching is that they are going to build a property ownership platform where you can buy and sell property in crypto through their token. And there are huge challenges with doing that. So let's dive in a little bit. So they're going to start off with some a few million coins. It's on Ethereum. That's all fine. Their amounts right now, they're saying one Ethereum is worth 20,000 of these tokens. Okay, revenue. So revenue is interesting. The you would think if they're doing real estate, then the profits are going to come from real estate. So partially, they're talking about doing uh, peer-to-peer projects with a bias towards low-cost housing will be available to participants on the platform. So that would mean something like, buying into a housing development of some sort, transactions. So they're going to take a fee off of the um, transfer of things, just like the lawyers and title agents and everything do. Currently, education, they're going to go on the roadshow, and there's going to be master classes will be available for how to profit with cryptocurrencies. So I'm guessing they're going to be charging for that as part of the revenue structure. Crypto mining, they're going to buy a piece of land somewhere cheap, put on some solar power or wind power or whatever to make the energy costs fairly neutral, and then they're going to be mining crypto, and then charity. So they're going to be doing something with charity. Okay, so uh, if you're buying into this and you think you're buying real estate, well, you're not. You're buying, I mean, maybe a little bit of real estate, but then there's also this other stuff. You're buying an education company. You're buying a crypto mining company, and you're buying essentially a real estate broker of some sort that is still yet to be determined. And then they've got the roadmap for the timeline, and they're currently on stage 2 of the token sale, and they're going to be developing their apps and first property projects, hopefully. Road shows, workshops, charity development, showcase our platform. That's all just advertising, basically. Q3 of here, we're looking at releasing of the wallet, um, finalizing their platform, so getting the software working. I'm a little concerned that this would come after the roadshow, but I guess you got to make the money first. Crypto mining and charity. Again, you're buying into at least partially a mining company, and it seems like there'd be much more efficient ways to do that. And 2019 and beyond, they're looking at uh, profitable projects undertaken and peer-to-peer platform operating and refined. Okay, so that's a pretty long roadmap for what they're talking about. Okay, and then this is their spiel. They're going to be at the forefront, yada yada. They've got their team. You can look them up. Um, you never really know unless you know the people personally, and I don't in this case. You never really know who's doing what and how involved they are. Just because your picture's on here does not necessarily mean anything, and that goes for everything, not just these guys. So, you know, I mean, the team is very important, but until everything else is satisfied in your research, then I don't even bother looking at the team because they could put anything on there. Okay, so I went over to the white paper, and call me old-fashioned. I think white papers are supposed to be technical documents. This is a pitch deck. So what they're saying is, real estate is really valuable. There's a lot of it. That's true. Cons are government bureaucracy, red tape, development issues, control, transaction fees, all these kinds of things. That's all true too. And their vision, their objectives, and the token is supposed to eventually allow you to transact real estate in cryptocurrency. So let's just stop right there for just a second, because think about how a piece of property is bought and sold. So let's talk about the U.S. That's what I'm most familiar with, but most jurisdictions across the world are fairly similar. So there's 123 Main Street, and it's a single-family house, 3-bedroom, 2-bath, 1,500 square feet, whatever it is. So some entity has to purchase that and own it, and then it's not going to be a Bitcoin address or an Ether token or whatever it is. And so then they're saying that something is going to own these projects, and then your token is going to be somewhat of an ownership in this. So first off, that's absolutely security, because you're taking real assets and distributing them amongst a pool, and then you're kind of you're basically an unsecured. Well, I mean, you're partially secured by the token, but realistically, you're an unsecured lender to this operating entity, and you're going to be subject to whatever issues that entity has in the different jurisdictions. Because if they're talking about Hong Kong, and they're talking about the U.S., and they're talking about the U.K. and whatever else, Australia, I saw mentioned, then you're going to have regulatory risk in all of those. So they're saying that someday you're just going to be able to buy property on on crypto, but that's not 2 years in the future. That's way down the road, because I mean the local county courts and the recorders offices that transact real estate, I mean, it's still basically on paper. I mean, going from paper to blockchain ownership is a huge distance to travel. So just know that if you're looking at this kind of thing. And then the revenue, crypto is valuable, real estate is valuable, growth, whatever. And I mean, the banks and the lawyers and the title research and all that kind of stuff, that does take up a lot of money. We're talking 5 to 10% per transaction of real estate. So that is definitely a thing we're solving. And then how they can purchase stuff, funds raised. The funds raised is interesting. So they're going to be going for development of the platform, roadshows, and apps. Okay, so if you buy into this ICO, you're not actually buying any real estate. That is theoretically down the road somewhere. So you're paying the founders, you're paying the team, you're paying for marketing, a reserve fund, and going into the tokens. Use of proceeds from the token sale, social responsible housing project, whatever that means, reserve fund, operations, platform development, roadshows, etc., etc. Okay, so they don't really define this anywhere, really. They say that there are financially advantageous ways to go with basically low-cost housing, which is true. Generally, in real estate, the lower end of the market gets you higher cash-on-cash returns. That is true because you're trading basically cash flow for equity appreciation. And they're going to have compliance officers, and they're holding funds in reserve for multiple wallets. That all sounds good. And then they've got their team again, and they're saying that there's not going to be any fees directly. You're going to have Ethereum gas fees, of course, and they'll be on exchanges and whatever. Okay. So last thing, I wanted to look at the fact, because I had a lot of questions after reading that white paper. And so, okay, again, talking about socially responsible, low-cost housing, crypto mining, charity. And why real estate? Yes, there are massive inefficiencies. Real estate is an inherently inefficient market because they're not identical goods and they're not easily transportable and all that kind of stuff. and you mentioned revenue from day one. How will you achieve this? Okay, this is an important point. One of the key areas that we feel cryptocurrencies have challenges is that they do not create enough revenue early on in the roadmap. I agree. All aspects of our business generates revenue to ensure we cover management and development costs to ensure that our token is around for the long term, because when transacting in property via cryptocurrency becomes the norm. Okay, when is that going to be? It's not next year. It's not the year after that. It's going to be a good long time. Even if all the different jurisdictions in the world that transact real estate, which is tens or hundreds of thousands of different jurisdictions, even if they go to a blockchain title system, that doesn't mean that you're going to be buying and selling a cryptocurrency. Blockchaining and cryptocurrencies are two different things. The blockchain is the fundamental technology, but cryptocurrency is an application of that technology. So this is a big, hairy, issue. But when it becomes the norm, let's say, there's going to be huge potential for any company in the space to capitalize on it. Okay, if that happens, that would be true. We will achieve our revenue from roadshows via cryptocurrency training, advertising on our listing app, property developments, and crypto mining. Okay, so they're going to charge for classes as they go around promoting their thing, which has nothing to do with real estate. Advertising on our listing app, again, nothing to do with real estate, and that requires a networking effect that they achieve some sort of scale. Property developments, that is actually real estate. And then crypto mining, which again is a different business. So owning the land is one thing, that's at least real estate, but crypto mining on that land, that would be a business that would have to pay a lease fee to the property owners. So I think that's kind of a ridiculous thing to include there. And the goal is to, make money, is to facilitate real estate transactions, all that kind of stuff. What do you mean by socially responsible housing projects? They're saying low-cost housing areas where local business or governments are not currently providing them. Not talking about large-scale housing. They're talking about providing a home to someone at a reasonable cost that's affordable, while also allowing token holders to profit from this project. So again, that's going to be a syndication ownership of an entity that owns a piece of property and collects rent and does the management and all that kind of stuff. So there are regulatory problems there, and hopefully those will be solved one day. Peer-to-peer project, how will they work? This exciting part of our platform allows participants to create their own project, which is made available to token holders. So let's say you had a house, you were renting it, making some money, you could theoretically put it on this platform, and then you would allow distributed ownership into that, which is a cool idea, but again, regulatory problems. And then their role will be to facilitate the entire process and ensure all parties are protected. The service would almost be impossible using fiat. It's not. You can buy a REIT. It's not that hard. However, smart contracts on the blockchain, the benefits large companies have had for years, are now available to everyone at a fraction of the cost. Okay, so when comparing to a REIT, that is true. So for those of you who don't know, Real Estate Investment Trust is a company that owns lots of real estate. It's usually commercial kind of stuff, like shopping malls or office buildings or what have you, and they trade on the on the stock exchanges. Like one really popular one is NLY, and they have certain tax benefits if they distribute a very high percentage of their net income to the owners. And so you buy, let's say NLY, not a recommendation, just saying for example, and you get last time I looked was like 13% dividend per year, which gives you the benefit of ownership of those underlying assets with whatever associated risks, and you make a cash dividend. So this is a similar kind of thing. So assuming everything works out, you have a piece of property, a house, owned by an entity which has distributed ownership over this blockchain in this token. Now the tenant of that property is going to have to pay rent. And okay, so is it going to be US dollars being paid rent and then having a conversion, in which case you have an exchange risk, or are they going to be paying rent in Ethereum or in this token? That seems like another potential mismatch issue. And how are we going to spend the funds raised? They're going to be spent in the following areas over the next 12 months. It is expected that the company will generate sufficient revenue from projects after this time to be completely self-funding. That's a laudable goal. completion of the building of our listed platform to allow real estate agents to list their client properties, along with the general public, completion of the peer-to-peer project platform to allow token holders to develop their own projects. The first 3 property projects, first 10 roadshows will be funded after which we have a program to self-fund them. Those are those classes that they're going to be selling. First 2 apps to be completed, and a small crypto mining facility to be run for 12 months to determine profitability before offer token holder participation. So again, I think this is ludicrous to include here, but it is what it is. So can you tell us more about the crypto mining facility? We have several members of our team that are experts in technology, and we know how to operate profitably, blah, blah, blah. Long-term investment in land is where the company and token holders can both capitalize. Through the charitable foundation we are in the process of creating, we also want to offer our participants the opportunity to gain hands-on experience in this area. Okay, so land appreciation is extremely variable. It depends on where you are. And they're saying they have the expertise, and that's great. You would have to check into the team to verify that claim. And but again, land appreciation is a different business than crypto mining. So, if I were doing this kind of thing, I would have the land as one part and the crypto as a separate company. And how do we see regulation? Regulation inside the real estate sector is huge and complicated, but also very important. Smart contracts are going to change how everything in real estate is transacted, and we want to be part of helping rewrite the regulations, as they will definitely need rewriting. That is all true. Cross-border ownership is just one issue, taxation is another, and as it becomes less difficult to purchase property via the blockchain, RPT wants to be involved in how cryptocurrency is regulated in regard to property transactions. We have a compliance manager and have partnered with the best legal team, and we are actively seeking opportunities to work with other cryptocurrency companies specializing in real estate to help mold the new regulations. Okay, absolutely agree with everything there. The issue I see is that this is an enormous regulatory burden to work on. So this is a very long-term kind of, tilting at windmills kind of thing. The established lobbies of the real estate agents and the closing attorneys and the title companies is extremely strong. So you're taking away their paycheck, and they're going to fight for that. So be aware of that going into it. And how many available, all that kind of stuff. So bottom line is, if you think you're buying just real estate, you're not. And it's going to be super challenging for them to execute on this plan. So I mean, if you look at all that and you, on a risk adjusted basis, you think it looks good, then look into the team and see if that's for you. For me personally, this is way too early to be getting involved in this kind of thing. It's not. I don't think it's an absolute scam like RE coin was, but I don't like the structure of how they're incorporating multiple businesses, and I'm skeptical as to their long-term success potential of completely overturning the real estate transaction industry. Anyway, that's just my thoughts. You do what you want.